Hello and welcome to Global Eye. I'm Parikshit Luthra. The top global story we have been tracking all week. US President Donald Trump has opened the floodgates for a tariff war with the imposition of reciprocal tariffs on all nations. As a part of his Liberation Day economic plan, President Trump has levied maximum retaliatory import duty on several nations. China, Vietnam, EU, Japan and India all feature on Trump's extensive list. Trump also said that tariffs for pharma sector are under review and will come in at levels never seen before. From anger and outrage to emergency meetings, Trump's tariffs evoked a slew of reactions across the world. China accused the US of using unilateral bullying practices and imposed 34% tariff on all goods imported from the USA. Canada has already responded to Trump's measures with tariffs of its own. The North American country has imposed duties of 25% on US imports worth $30 billion. Similarly, European Commission President Ursula von der Leyen has warned that the EU was prepared to respond with countermeasures if talks with Washington failed. Let's now talk about India. Trump has imposed 26% retaliatory tariffs on India. He has reiterated that India is a friend of the nation. However, New Delhi has not been treating Washington right. Remember, both the nations have been trying to secure a bilateral trade deal. Sources indicated that the US tariff action may accelerate efforts to conclude the free trade agreement between India and the European Union. We have learned that ministers from both sides will be holding a phone conversation within the next few days. We're now joined by Christine Bliss, President of the Coalition of Service Industries, the organization dedicated to enhancing the global competitiveness of the US service sector. This is an industry body that represents major American companies like MasterCard, Disney, Visa, Amazon, Microsoft, Walmart, Google, and others. Christine, thank you very much for joining us once again on Global Eye. This really hasn't been good news for the American industry, has it?
It is not. We continue, my members continue to face continuing uncertainty as to how all of this will unfold. We were very disappointed we knew it was coming, but we were disappointed with the announcement and the level of tariffs that were imposed, both the across-the-board tariffs and the individual country tariffs. Needless to say, it is causing a considerable amount of business uncertainty in terms of planning, future planning, supply chain disruptions, and simply what this will mean. Will it mean a real attempt to try and force U.S. companies to reshore their operations back into the United States? And how much energy will be spent in actually negotiating trade agreements that would secure the removal of tariff and unfair tariff barriers, which would be a benefit certainly to my members and to U.S. industry.
Right. I'd like to ask you about the impact of the U.S. services sector specifically. What do you foresee?
Well, as I said, the immediate impact, as is the case across the business community, is a great deal of uncertainty, and also the fact that many of our major trading partners and close allies have been hit with tariffs, and also on a business-by-business basis, we're waiting to see what the individual reactions will be about existing business relationships and operations. But clearly, there is going to be an impact on supply chains as long as these tariffs are in place. And then, of course, the retaliatory measures that have been announced by the Canadians and by the Chinese. It's not clear the degree to which they will directly reach services. Some of my services companies are also manufacturers, so they can be impacted by some of the tariffs directly on goods. But to the extent that others, such as the Europeans, who have so far held back and not imposed retaliation, they at least have indicated that they would consider the possibility of imposing tariffs on services. So that's something that we're very concerned about. Also, I think we're looking for immediate declines in level of business, whether it's in the travel and tourism sector, whether it's the increased burdens and costs on distribution services, whether it's the increased burdens and costs on logistics services, will be very immediate. Because one of the things that you didn't mention in your introduction was that the president also ended, with respect to China, the de minimis exception for goods of a small value, and also indicated that over the long term, that exception would be ended for all nations, but that will depend on a determination of when the U.S. and its customs border is able to actually administer something like that. So that's going to be an added burden, especially to small business suppliers. And then finally, what we're looking at is whether it will chill investment into the United States, which is a very important source of employment, and certainly for service suppliers and others.
Okay, let me ask you about your appeal to the Trump administration. And do you even think, Christine, that these tariffs are well thought through?
Well, I do think that there was a considerable amount of thought that was put into it and debate. I think we in business were aware that certainly President Trump has a large group of advisors that were giving him various options to consider. And so, yes, I think they thought about them. I think it's just what they seem to feel was most important in the long run. And from the president's own statements, that seems to be trying to convince U.S. business to reshore onto the United States. It seems to be to also, as he feels, create an unfairness in the balance of tariffs between nations, and also feels the importance about raising revenues. So I think to the degree that those objectives were thought about, yes, they were well thought through.
All right. You know, when it comes to India, India has a lot of services export to the United States. And with the emphasis of the administration on manufacturing in the U.S., reshoring operation, creating jobs in the United States, how do you think the services export from India to the U.S. is going to be impacted?
Well, I think, again, I would turn immediately to the disruption in supply chains. I think if you look, for example, in the semiconductor industry, where India has a very large part to play, whether it's software development, research and development, I think to the degree that there are tariffs put on individual products that are part of that supply chain, price increases, and thoughts about whether there has to be any reshifting, rejiggering of those supply chains, there will be an impact directly. I think similarly, with respect to logistics, there will also be an impact very directly, particularly over the long term, as the de minimis exception goes away. I think other than that, really the future depends on whether there is a serious engagement and negotiation between the U.S. and India to negotiate a full free trade agreement, which would be what we would favor, that would include the removal of digital and services barriers. And that we would see as ultimately very beneficial. And let me just remark and go back to your previous question briefly, which is to say, well, I said I think yes, the tariffs were thought through in terms of the objectives that I mentioned, which I understand are those of the president's. I think from our perspective, what does seem to be downplayed and ignored are the recessionary impact, the inflationary impact that they're going to have the longer they're in place. And that we're very concerned about.
Okay, my final question to you would be about the progress in India-US trade negotiations. Now, we have been negotiating a trade deal for about a month. Last week was 5-7 days of intense negotiations, probably too early to come to any sort of deal. But what is your assessment as an industry veteran who has been engaged with the government through several advocacy and policy programs? Where do you think the hurdle lies in India and US coming to an agreement? When the president says India has agreed to give far-reaching concessions to the US, but we'll still impose reciprocal tariffs, why is that happening according to you? And what is US looking for at this juncture, which has not been arrived at?
Well, I think a major emphasis has been on tariffs, and probably tariffs in the agricultural area in particular. I think from our perspective, the negotiations need to broaden into services and digital, because that's where you will see significant progress along with the lowering of the industrial tariffs. Things like data flow restrictions and data localization barriers and non-discriminatory treatment in the tax area and treatment of our electronic service suppliers in terms of their ability to supply their services. And I'm talking about things like credit cards and having access to credit. And so I think that, you ask about major hurdles. I think that getting agreement that it should be a far-reaching agreement is going to be a bit difficult, but one that we think is incredibly important, and really to strengthen geopolitically and commercially the relationship between US and India.
All right, Christine Bliss, thank you so much for joining us with your view, with your reaction to the reciprocal tariffs and the kind of disruption, the chaos it's going to throw in for businesses worldwide. We're going to take a short break here on Global Eye, but coming up on the other side, US President Donald Trump's tariff blitz has rattled stock in commodity markets across the world. We will be joined by Rosenberg Research's Bhavna Chabra on the other side. Stay tuned. Welcome back. You are watching Global Eye. Trump's tariff blitz has sent equity markets across the world in a tailspin. From US to Europe to Asia, investors are rattled as they try to grasp the magnitude of Trump's tariffs. Wall Street saw its worst day in 5 years on Thursday, a day after Trump's reciprocal tariff announcement. 7 large Nasdaq-listed tech giants, colloquially known as the Magnificent Seven, saw a market cap erosion of over $1 trillion. European markets tumbled on Thursday and Friday. These are fears across the continent that United States tariff strikes could push economies into a recession. The story in Asia has been no different. A report by Rosenberg highlights that Trump's tariff plan is destined to witness some speed bumps going forward. Rising trade tensions will put global supply chains at risk, and Treasury yields were seen declining as investors are seeking safety. How long will the tariffs continue to impact global markets, and will there be any reprieve going forward? To discuss that and more, we are joined by Bhavna Chabra, Senior Market Analyst at Rosenberg Research. Bhavna, thank you very much. Welcome to Global Eye. Now, it had been known for almost a month that these reciprocal tariffs are coming, but perhaps the extent has surprised some nations, including India as well. What do you think will be the impact on US markets? If we start with US markets, what's going to be the impact over the next few weeks? We saw a sharp reaction initially, but how will things pan out?
I think we have to look at it in the context of what the fundamentals of US markets are and what lies ahead. So I'd like to highlight a few things here. When we're talking about trade uncertainty, global supply chains shifting, the first degree impact is trade contraction. When the trade contraction happens, earnings growth estimates they get trimmed down. When that happens, markets are bound to head lower. Then the second thing I want to think about is the multiplier effect. When the US market falls, you have wealth effect playing to consumer spending. The businesses cut hiring, they in fact fire people. Then you have people spending less. So that has a negative multiplier impact on the economy. The third thing I want to talk about here is DOGE-related cuts. So, the US economy had been on this fiscal bump. We had so much spending coming in from the Biden government in terms of IRA, chips, and then before that, COVID-related support. That sort of helped the economy sail through despite one of the worst monetary tightening cycles we had seen since 1980s. So when we are coming off this kind of a situation, all these tailwinds that were there in the economy are sort of fading. And then we have an uncertain road ahead, which means trimming of earnings estimates. On top of that, the valuations, they are off the peak. So let's say I think the S&P 500 is down about 13% from the highs. NASDAQ has corrected by about 17% over there. But the valuations, they are like the S&P 500 12-month forward PE is at 20 times. Like if I were to look at last 20 years average, it's about 16 times. So now think about this. You have earning downgrades coming in, which are expected to happen in next few weeks, next few months. And then you have valuations, which is one standard deviation above the norm, a little touch, little less than that one standard deviation mark, but still high. I mean, this sounds unsustainable to us. And that's why we feel that there is more downside to come apart from what we have seen so far. Markets are not yet priced in for a trade war. We had seen trade bumps. This is like an all-out trade war. We saw retaliatory announcements from China this morning. We will see more. Like Europe is considering its response. So I mean, it's bumpy road ahead, to put it simply.
All right, bumpy road ahead, further downside, and markets had not factored in a trade war to this extent. That's what you're saying. The impact on India. 26% tariff on India. India is not immune, but what would be your view on the Indian markets as of now? How would global investors be watching India amid this global uncertainty?
That's a good question, because India has been one of our most favorable calls over the past few years. Yes, there have been speed bumps in the road here as well. For example, like we saw this correction in the small and mid cap space over here. There are two factors to this. One is the structural growth story of India, and one is the near-term story. So we do believe that there could be challenges in the near term, but markets had corrected even before the correction in the US markets began. So the valuation had come off the overstretched levels. Second thing to consider is, yes, 26% tariffs are high, but there are two factors here. One, India's dependence on goods exports is relatively lower when compared to the other countries we are talking about here, Bangladesh, China, Vietnam, etc. Then second factor over here is, like I was talking about how the goods dependence is lower. The second factor is India depends on services exports a lot more. And then we had valuations come off the peak. When we're talking about those factors, and then I have to speak about very quickly about how the fiscal drain or strain on India has should sort of be in the backdrop now, because we had seen government spending go down reasonably before the elections. That's sort of stabilizing. The RBI is expected to cut rates, so we look at it more favorably. But having said that, the negative news flow around pharma, etc., could keep it bumpy for some time ahead. But for somebody who can be a long-term investor in India, we advise buying on these dips.
All right, so buying on when it comes to India, but of course,
Yeah.
the tariffs in the pharma sector could be a big bump, and India is a major pharma exporter there. And Donald Trump has said that no one will be spared. Pharma tariffs are going to come like never before, like nobody imagined. He's even gone on to say that. Now, amid this all-out trade war with all nations, retaliatory tariffs coming in, what are the pockets of opportunity? Manufacturing, the auto sector definitely will be impacted, but who could be the gainers if the investors have to make the most of the current global situation? Which are the pockets of opportunity according to you?
Okay, that's a good question. So let's start with global factors to start with. So starting with the US markets, I think what we expect is there is a flight to safety right now that's happening in the market. We expect that to continue. So we believe that the US treasuries would do well in this time because the yields will fall sharply. For example, the markets were pricing in 3 rate cuts from the Fed over the next 12 months. Now that's up to 5 rate cuts. So we do expect yields fall. There are inflation risks associated with the tariffs, but we believe the growth risk would trump inflation risk, because inflation would not be really, really sticky in the near term over here, over the longer run over here. So treasuries is something we like. Gold is something we like. Yes, the gold had like climbed to lifetime highs, and it has sort of come down a little over the last 2 days, but we see secular tailwinds behind gold, and that's why it's one of our favorite calls. It remains one of our favorite calls. When I'm talking about US equities, we are recommending investors to go defensives. We really like utilities. We like we have recently upgraded consumer staples because of the defensive bent of the sector. We don't like consumer discretionary because of high tariff exposure of the sector. We also think that financials would survive this relatively unscathed in US because they are more domestically oriented. They are not so exposed to tariff. Yes, there are challenges to deal pipeline over there. Yes, there are challenges to asset risk redemptions. But to that tune, we believe it's a good idea to keep it neutral weighted to a mild overweight. Healthcare is an interesting sector in the US where we like service providers over the equipment manufacturers or pharma plays because of the very reason. So these are the things. Now, if I were to talk about India very quickly, since we are more of global macro house, so we look at it more top down. We believe financials would sort of tend to stand out in current situation because again in India it's domestically oriented. So this is how we are looking at it. RBI is set to cut rates. That's good for Indian bonds. So this is how we are looking at asset allocation. Be more risk off right now. Be in more defensive segments of the market till the time this uncertainty settles down, and then investors will have an opportunity to buy assets at better prices. That's how we are looking at the situation.
All right, one final question before we let you off, Bhavna. Donald Trump has said, I never go back on my announcements. So in a way, he's threatening the world that these tariffs are here to stay. Even though with trade deals with some countries, including India, there may be a halt to some of these tariffs, it seems that he would like to continue this harsh trading relationship or make trade, fair trade, a center point in global relations. Having said that, do you expect the uncertainty to settle down in 6 to 8 months and things will be normal after that? Or do you expect this uncertainty to continue for the rest of the Trump administration?
Actually, uncertainty is a hallmark of Trump administration. If we remember, Trump 1.0 was not very different. I think it's a bigger and a more louder what we saw in Trump 1.0. So we do expect the uncertainty to continue. In fact, when we released our outlook earlier this year, this was the central theme, the bog of uncertainty. So we expect it to stay. And I don't think the uncertainty ends there. One of the, few of the campaign promises that President Trump had was he wanted to talk about he wanted to go with deregulation in the financial sector and in healthcare sector and in many other sectors. He spoke about tax cuts, etc., etc. But US is staring at a huge debt figure over there. There's a debt ceiling issue. So there are multiple issues down the line. So even if the trade uncertainty settles for a bit, which we believe he's trying to use as a bargaining chip with some misguided information. For example, the tariff calculation. 26% tariff on India. India has an weighted average tariff on the US in single digits. So do many other countries. A few of them are 0%, like Australia. But Trump's administration still had tariffs on them because this is basically the trade balance with those countries divided by the total trade value. So he's basically punishing companies for having a trade surplus with the US. So his idea is if I eliminate this trade surplus, which he's reading as subsidies, it will all go away. But the problem is it comes with capital, like if I have to balance this equation of current account, if I have a trade surplus, like a trade deficit, I have a capital surplus. If I stop having this trade deficit, this capital will also flow out of the US. So we have to keep all these factors into consideration. So coming back to your question, I'm just listing out the kind of uncertainties we could see in the future. These are a few. So we really don't expect this uncertainty to go anytime soon.
All right. Let's just hope that somewhere Trump understands that his policies are really hitting the US markets and are not good news for the global economy either. Thanks, Bhavna, for joining us. Let's move on and get you more global news. Prime Minister Modi attended the 6th BIMSTEC summit in Bangkok. The summit was aimed at boosting regional cooperation among member states. The key highlight was the adoption of the BIMSTEC Bangkok Vision 2030, which laid out a roadmap for a resilient and open BIMSTEC by the end of the decade. Member states also signed a new maritime transport agreement to boost trade and cargo movement across the region. In light of the devastating earthquake that recently struck Myanmar and Thailand, leaders called for stronger disaster management cooperation. The leaders expressed solidarity with the affected communities. Myanmar's military leader, who has drawn criticism over his regime's human rights violations, also made a rare appearance at the event. Staying with BIMSTEC, Prime Minister Narendra Modi also met Bangladesh's Chief Advisor Mohammad Yunus. External Affairs Minister S. Jaishankar and National Security Advisor Ajit Doval were also present. In their first meeting since the ouster of Prime Minister Sheikh Hasina in August, Prime Minister Modi underlined India's desire to forge a positive, constructive relationship with Bangladesh. The Prime Minister also raised India's concerns on the safety of minorities in Bangladesh. Addressing the media, Foreign Secretary Vikram Misri said that Prime Minister Modi pressed the Bangladeshi leader to conduct a thorough investigation into all cases of atrocities done against Hindus in Bangladesh.
Prime Minister also underlined India's concerns related to the safety and security of minorities in Bangladesh, including Hindus, and expressed his expectation that the government of Bangladesh would ensure their security, including by thoroughly investigating all cases of atrocities committed against them.
And with that, it's a wrap on this edition of Global Eye. Thank you for watching. Stay tuned to CNBC-TV18. News continues on the other side.